U.S. Treasuries Spearhead Tokenization Boom. Driven by favorable macro conditions and increased willingness among traders to dive into real-world assets, the market for tokenized debt is flying. Jeff Wilser reports for Trading Week. If the 2021 bull run was known for cartoon apes, meme coins, and gushing endorsements from celebrities, the next wave of crypto adoption, or even crypto spring, could come from something less sexy but more substantive, the tokenization of RWAs, or real-world assets. At least that was my thesis earlier this year, when I reported on the projected $16 trillion market of tokenized RWAs. Since then, this post is part of Consensus Magazine's Trading Week, sponsored by CME. The tokenization space has caught fire, providing new tools and profits for investors and traders alike. This is especially true of tokenized U.S. Treasuries. According to 21Co, the market value of tokenized treasures increased nearly sixfold since the beginning of January, jumping from $104 million to $675 million. One reason has nothing to do with crypto and everything to do with macroeconomic forces. The exceptional growth was fueled by the rise in U.S. Treasury yields, says Carlos Gonzalez Campo, a research analyst at 21Co. Thanks to the gauntlet of rate hikes by the Fed, the 3-month Treasury yield surged from virtually 0% at the end of 2021 to over 5% at the time of this writing. Not bad for the boring asset. Amidst the uncertain macro and geopolitical environment, says Gonzalez Campo, there has been a flight to safety to U.S. Treasuries. Traditional banks might not have much interest in Dogecoin or NFTs, but they love things like instant settlement, which you get with RWAs, 24/7 trading, lower costs, and the transformation of illiquid assets into liquid instruments. So the bankers are getting in on the action. Franklin Templeton, for example, tokenized over $300 million of its U.S. government money fund on Stellar and Polygon. The European Investment Bank issued 150 million euros of tokenized bonds, and the CEO of BlackRock, Larry Fink, called tokenization the next generation for markets. The buyers of these tokens include traders, investors, DAO treasurers, and wealth management firms. This is specifically interesting for people who are already in stablecoins and looking for diversification and who are looking for yield with very little risk, says Nils Baling, COO of Traditech, a UK-based private debt and real-world asset marketplace, which recently launched tokenized treasuries on the XDC blockchain. In the world of traditional finance, it's common to diversify a portfolio with treasuries and bonds, which provides a sort of shock absorber in case the stock market collapses. Crypto investors sometimes use the same kind of risk management, but instead of U.S. Treasuries, they use stablecoins. The good thing about stablecoins is that they are theoretically risk-free. The bad thing is they offer no yield. Read more from Trading Week. Post-FTX, Bitcoin is ready for its next chapter. The U.S. government bond is seen as a risk-free rate, says Baling, and if you can get 5% instead of 0% and do it on-chain, then why wouldn't you? The other problem with stablecoins, of course, is that sometimes they're not entirely stable. Exhibit A, Terra. So Baling considers tokenized treasuries to be a nice hedge against a peg risk. Given today's juicy yields, many in the crypto space now see treasuries as essential to modern investing. Alan Pedersen, the CEO of Monetalis, which work to tokenize RWAs for MakerDAO, even compares tokenized treasuries to carbon, as in the chemical element. You need carbon for life on Earth, says Pedersen, and you need U.S. treasuries for life on-chain. Trade finance. Treasuries make up the bulk of tokenized RWAs for now, but more asset classes give investors more options, some with higher risk and returns. Consider trade finance, or the arcane world of invoices and receivables. If someone sends an international shipment from Copenhagen to Cairo, that invoice is part of trade finance. Companies like Traditech are working to tokenize these invoices, which brings more liquidity to the market, gives more borrowing options for small businesses, and provides yet another asset class for investors. Baling thinks market alone is over $1 trillion and considers trade finance the last frontier in finance. Or take small business lending. This is kind of a niche area of underwriting, says Sid Powell, co-founder of Maple Finance, which also tokenizes RWAs. Small business loans can offer yields of well over 10%, says Powell, and he gives the example of a COVID-era tax rebate program. Let's say you're a pizza shop that kept your employees during COVID in 2020. The government created a stimulus program through taxation, where they effectively rebated the taxes you would have paid, says Powell. Thanks to government bureaucracy, these rebates took years to process and don't sunset until 2025. Now they can be tokenized and traded as an asset, bringing yield to investors. Once a real-world asset yield gets above 10%, it starts to become much more interesting to funds, high-net-worth investors, and other institutional allocators, says Powell. Some of these deep pockets might wish to invest in both cryptocurrencies like Bitcoin and traditional equities like Apple stock, and RWAs let them do both in the same ecosystem. For people who are investing and trading in crypto, and there's not always a clear distinction between the two, then you kind of want to have all of the above, including stocks and bonds, says Timo Lies, co-founder of Swarm Markets, which also brings RWAs on-chain. You don't want to do all these wire transfers in between applications. More aggressive traders are finding ways to leverage tokenized treasuries to squeeze even more yield. I've seen people who do loans via various protocols and leverage 5 or 6 times, says Patterson. You buy a tokenized treasury, then use that as collateral to get a loan, and then buy more treasuries, and so on. You can lock in 10% to 15% of interest by layering on top of each other, says Patterson. This is the obligatory time to say this is not financial advice, and over-leverage can backfire. Or, as DeFi researcher Thor Hartvigsson explained in a widely shared X thread, you could get a 16.3% yield by looping various RWAs and acknowledged, alright, this is getting out of hand. Putting the merits of leverage aside, there's every reason to believe that the tokenization pie will keep growing. Adam Lawrence, CEO of RWAs, a data provider, suspects that the tokenized treasuries market is entering its scale phase and predicts that over the next few quarters, tokenized treasuries will easily tank the current market size. One final thought. While the words risk-free should make everyone in crypto do a double take, we've seen that movie before in the case of U.S. treasuries. That really is how investors view the asset. But then again, as the House of Representatives descends into chaos and another government shutdown always looms, it might also be fair to ask, tongue firmly in cheek, what could possibly be risky about the U.S. government? So, as with all things in crypto investing, caveat emptor,